People always ask me, Julie, how do you know which US stocks to buy and how do you research before investing? Hi everyone, Efe Julie here. For those who are new to my channel, I'm a Certified Investment Financial Analyst and my mission is to make investing simple, clear, accessible for you. Now, here we don't gatekeep. And here's the exact process that I use to research global stocks before I buy them. Feel free to steal my strategy, and I do this all on IBKR. And please note, this is not an advertisement. I am just sharing my experience. So if you want to learn how I analyze companies, evaluate financials, look at key ratios, assess the industry, and build a solid investment thesis, stay with me. This will be a valuable, detailed reference for both beginners and serious long-term investors. Now, when I hear about a company that I'm interested in buying, before I analyze the company, I start with the industry research. Now, because a company can only grow as fast as the industry it operates in, so I ask myself three main questions. Is the industry growing? Is there strong future demand? And what are the major trends or risks shaping the industry? Now, if the industry has long-term growth, healthy demand, and future and positive trends, then the company that operates inside it will have room to win. But if the industry is shrinking or being disrupted, even a great company will struggle. So now, after we've ascertained that the industry is good, we will now go to the company research. And this is how I want to show you how I actually do the company research step by step. So walk with me. Now, when it comes to analyzing companies, the rule number one still applies. Don't invest in what you don't understand. And if I can't explain a company in one simple sentence, then I'm not buying it. So inside IBKR, I go to research. Then you go to Fundamentals Explorer and I type in the ticker symbol. So for today's example, I am using Google. Ticker symbol is GOOGL. Now, especially because the stock has been trending recently after reports that Berkshire Hathaway bought shares, anything Warren Buffett touches always piques a lot of interest. So it's a perfect example to walk through. So I will click overview, and when you click overview, you're going to see a quick snapshot of the summary of the company. There's the key ratios, the dividends, the ESG ratings for those who are keen on ESG, and then you have the analyst ratings and so much more. And remember, if you can't explain the business clearly, you can't be confident in the investment. Next, if you now want to go deeper, you click these other sections. First one, we're going to start with the company profile. So here you'll find a business and financial summary, and then when you scroll down, you're going to see the share details, which is the shares outstanding, shares issued, and then you also have the corporate structure or management information. Now, very important. I check management because leadership is everything when it comes to running a successful company. So the question that I ask myself is, one, who is the CEO? What are their track record? Are there any scandals, any governance issues? What are the insider doing? Are they buying or selling? Now for Google, you'll see that the CEO is Sundar Pichai, 52 years old, and you can read more about the rest of the executive management team. There's so much information on the internet about this. Remember, a strong management team can always build a great company. A weak one can destroy it. The next one, we're going to look at key ratios. So when you look at key ratios, this is where you understand whether a company is healthy, efficient, or fairly valued. Now, we have various key ratios. For instance, we have the price and volume one. So I'm going to talk about the PE ratio because that is the common one. Now, as you can see, Google has a PE ratio of around 33.89, which is higher than the industry average of 21.44. So what you'll find out is that most tech companies or most growth companies, they often trade at higher PEs because the market expects strong future growth. So always compare the PE ratios to the industry average and not in isolation. Then when you also scroll down, you're going to look at there are also other shares, like for instance per share, the book value per share, cash flows per share. The other ones is management effectiveness or profitability ratios. So for instance, here we have what you call the gross margins, operating margins, and the net margins. So these margins show how effectively the company runs revenue into profit. So stable or rising margins means that the business is strong and competitive. And then we also have the ROEs, the ROAs. So this ratio shows whether management is using investors' money to compare assets effectively. And then when you scroll down, you're also going to get the debt ratios, whereby too much debt can kill a company, but also strong companies, they tend to manage debt very well, especially in tough times. So there are so many ratios to look at. But I've just mentioned the most important ones. Now, the next one, we go to dividends. So when you look at dividends, essentially, here you're going to see the dividend ratio, the dividend yield, the payout ratio, the dividend history, and payment schedule. Now, as for Google, they pay dividends every quarter. That is in March, June, September, and December. Now, one thing you'll notice is that the payout ratio and the dividend yield for Google are very low. We're talking about a payout ratio of 8.23% compared to dividend yield of 0.29%. So which is normal for growth companies or other stable companies, not stable companies, but rather growth companies, because they prefer reinvesting instead of rewarding shareholders. Like there's a lot of capex, they'll tend to reinvest that back into the company. Now, if you're specifically looking for high dividend stocks, then this wouldn't be one. Now next, we go to ESG rating. So if you're very keen on environmental, social, and governance principle, you can be able to see how Google scores against all these other principles. Then we go to financials. Now, when it comes to financials, basically you're trying to understand the company's trend. So you're looking at the revenue growth year after year. Then we have the earnings growth. Is there consistent profitability, cash flow stability? If revenues and profits are growing consistently, then the company has momentum. But if everything is declining, then that's a red flag. Then the next one, we go to analyst ratings. Now, when it comes to analyst ratings, here you're going to see the expected price target from various analysts. And then we have what we call the hold, buy, sell ratings. We have targets from firms like we have Refinitives, TipRanks, Morningstar. And then when you go to Morningstar, you can actually see they have what we call the bull say. So bulls are basically people who believe that Alphabet stock is going to continue going up. So you'll be able to see what they're saying about it. And then we also have the bear say. I find this very informative and insightful. And then you can also read the earnings analyst note, the business strategy and outlook, the MOAT. There's just like so much information when it comes to all these analyst views on the stock. And then the other one, so when it comes to analyst ratings so I never follow analysts blindly, but I use these as context just to try and understand how the professionals view the company. Then the other one is news. So when you come to news, now you can be able to, check the recent news, earnings releases, press statements, and if needed, the company's annual report. Now, IBKR pulls this all in one place and makes research so much easier. Now, finally, I put everything together to write my thesis. So what am I buying? That's the company, the problem that the company is solving, what's the growth story, what will make me sell this company. So when you look at fundamental analysis, if these fundamentals start, like looking all bleak, meaning revenue starts declining, the growth prospect of that industry no longer makes sense, then when it comes to such, it will also impact or rather affect whether I'm going to sell or continue holding that company. So this also keeps me disciplined, and it also prevents me from, investing based on hype. Yeah. And so that is how I analyze global stocks before I buy, step by step, using IBKR. And if you want me to analyze other stocks like Apple, Tesla, Nvidia, we can do it together. So let me just know in the comments. And if you found value in this video, like it, share, subscribe for more clear, practical investing educational tips. Thank you.